JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 2nd of November 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, check it out. Check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. So again, we did kind of initially make our way higher here, but as you can see, it wasn't enough here, and Nikkei kind of drifted back down and ended the day in slightly negative territory. So, but it remains above this 29,489 level, the one that I kept mentioning. So in a way, there's still a decent chance for this one to move higher. So to be honest, the outlook for me still remains the same. I'm continuing to aim for slightly higher levels on this one, but now, for example, given that we have failed to move above yesterday's high, then yes, this is the level that I'm going to be keeping a close eye on as well, this 29,666 level, and as we pop above it, yep, would confirm a forthcoming higher high and potentially could attract more buyers. Shanghai Composite, so this one drifted lower, guys, and yep, it declined. It fell below the below that hurdle, the one that I kept talking about, the 3,515 zone. It's still trading below it. We still have around 50 something minutes left of trading on this one. So yep, it fell, and also fell below the 200-day EMA. Look at this. I mean, there is a bit of weakness here on this index, and well, I mean, let's see if the 200-day EMA eventually will provide support. If it can, then maybe a bit of a rebound here could be possible. However, again, in terms of the rebound, I'm going to be very careful due to the fact that it broke this area. So in a way, it increases the chances for a further move lower, and that's why let's be a little bit more on the safe side, guys. If you're looking for some downside, then well, we did get that move initially. We did get a break below that hurdle. Yes, it dropped lower, and it also then fell below that 200-day EMA. However, the bulls managed to lift the index back above this 200-day EMA. Can they keep it above it? We'll just have to wait and see, guys. For now, it's a bit of a tricky one here. For the upside, I'm still sticking to the same 3,553 level right here in order to aim for the upside. Now, German DAX, so good push higher, moved nicely to the upside, and yep, it also ended, well, not also, but it ended the day in positive territory and managed to stay above that 15,792 territory. So at the moment, I would say everything's still kind of looking quite positive. We do have an upside line. I mean, this one, the one that I used to, well, the one that have drawn before, this one here, you can see that we are still above it, but I'll get rid of it and I'll mainly kind of focus on some of these key support and resistance levels. So for the upside, as I said before, if we continue to trade above this 15,792 territory, then yes, my next target is the current all-time high near the 16,030 level. And then yeah, we'll take it from there, guys. For the downside now, I would rather maybe stick to and kind of to this 15,600 level for now, and if we drop below this again, then yes, I'll start looking at the downside. We will initially then keep an eye on the, of course, also sorry, not initially, but we'll then keep an eye on the 21-day EMA. If that gets violated, and then if we fall below the current lowest point of this week near the 15,495, then yep, more sellers could join in. So basically we'll go on this one slowly, but initially, as I said, I will start looking at slightly lower levels if we fall somewhere below this 15,600 area. Dow Jones Industrial Average. So made another good move higher, created a new all-time high yesterday, and yeah, let me just mark that one on the chart. So the level that got reached here was around 36,026 level, I think. Let me just double check. Sorry, 36,010, approximately around there. But basically everything kind of still worked out nicely. What I was targeting, that psychological 36,000 level, and yeah, we managed to hit that. And the big question now is, can we continue rising? Well, looking at the cash index, we'll see that the price actually has corrected lower, and we are now back below, I think, let me just bear with me one moment. I think yes, we are below this 35,892 level, which was the previous all-time high near the highest point of October here. And yeah, so we're back below this hurdle, and if we stay somehow below this hurdle, then well, maybe a bit of a corrective move lower might be possible. So keep that in mind, guys. For the upside, what I would rather see here is a push above that 36,010 level, and then I would aim for higher levels. DXY dollar index, so drift back down here, corrected lower. I mean, as you can see, this 94.17 level kind of did continue to do its job and provided resistance, and kind of, or I wouldn't say maybe resistance, but it kind of, yeah, it was that level below which the index closed again and stayed below again. So so it's a little bit of a messy chart here, I would say. At the moment, we are kind of drifted back down, but we're staying above this 21-day EMA. So in other words, we're kind of just oscillating around that 21-day EMA. So now let me just probably redo everything here, and if we're looking for some downside, now at least a drop below this 93.50 level would be needed. This is when I'll start looking at some lower levels. I'm not saying that this is where I'll totally become bearish or something, but no, I mean, this is from where we will start looking at the downside. For the upside, I would start looking at high levels at on a break of this 94.17 level, and then of course we'll aim for the current highest point of this week near the 94.31 level, and then so on, so on. But for now, again, guys, it's like I said, it's a tricky one. I hate these scenarios when the instrument starts just oscillating around one of its EMAs. But well, we need to try and kind of get something out of it, or maybe even just better. Probably the better option is to wait for a better opportunity. And in this case, like I said, a breakthrough one of those levels that I mentioned. Let me just actually mark them on the chart here. So, yep, a breakthrough one of these levels probably could help us out here a little bit in terms of trying to find the next short-term directional move. Silver is yeah, drifted back down. However, it's still holding on to this short-term. Well, maybe I wouldn't call it a tentative no longer, but yeah, this short-term upside line taken from the low the 30th of September, and yeah, if we're if we're looking for some upside, then there is still a chance for this pair, this commodity to move higher. However, given the proximity of the commodity to this line, we'll be very careful, because if it breaks below it and stays below it, certainly this could open the door towards some lower areas. But I would rather maybe wait for a drop somewhere below this area right here, somewhere in between these two levels, so basically around that 23.60 zone. A nice drop below it. At the same time, we could see a drop below that 21-day EMA as well, and then lower levels could be met. So keep that in mind. But again, as I said, because we are still kind of hanging here slightly above this upside line, there is still hope that the buyers could step in here. However, I would rather take a bit of a careful approach and wait maybe for a push above this 24.61 level, just to be a little bit more on the safe side, because at the same time the precious metal would be placed above all of its EMAs then. We can see in chat room here, yep, Evu and Leonard, good morning to you too. I hope you're having a wonderful start of Tuesday, guys. Jumping into the charts and back into the WTI oil here. Looking at this picture, you can see that yes, the commodity pushed higher, and it moved north, and it did kind of come closer to the current highest point of October, near the 85.40 level. But you can see that yesterday the bears kind of took control, and here basically now what I'm afraid of, I mean, I'm trying to understand if this is going to be the case or not, but basically one of my favorite patterns here, the Bearish 3 pattern. So just to bear with me one moment. So yep, let's see if this is going to be the case or not. So we have these when we have this candle here, and then the bodies of the consecutive candles, 3 consecutive candles, is within the body of that first, the bigger drop here, and then basically we get this reversal back down. However, again, this is one of those theories still. I mean, let's wait and see if that's going to be the case or not. So that's why probably I'll stick to the same area for now, the one that I mentioned before, this 83 territory. If we drop below this 83 zone, then yes, we could go for a bit of a larger correction here to the downside. However, if it starts popping above the highest point of October, near the 85.40, then well, we can kind of we'll go for the upside. Then this could confirm a forthcoming higher high. Leonard, I can see, yep, your request. Okay, I can quickly have a look at that one. Just bear with me one moment. Let's see, where is my gold? There we go. So quickly on gold, and let me just bring it back here. So here, and it's tricky. It's a very tricky situation. I mean, at the moment I'm very neutral on this one, just because it's not really working the way I would like it to work, of course. But as we understand, the markets don't always do what we want them to do. But so that's why I would go from what we have. So Evo, yes, is the pattern is called the Bearish 3, or the Bullish 3. I mean, it depends. So yeah, that's yeah. I mean, this is in terms of the today's candle. It should be part of it, but again, maybe let me just go back quickly into oil. So this pattern, this candle here, if it, let's say, turns around and goes lower, let's say, then yes, it could confirm this pattern. If, let's say, this today's pattern, this today's candle will turn eventually bearish and turn red, then yes, this nice pattern could be confirmed. However, until kind of that happens, let's say, for example, in here, in this situation, probably if it starts maybe falling somewhere, let's say even below this hurdle here, the 83.81 level, then yes, we'll start seeing this one as a bearish candle here. The candle will be in the negative territory. We will be in the negative territory here for WTI oil, and then it will start further sliding and drops below this 83 territory. Then this so on and so on. It can confirm the kind of the further decline basically, and basically this is the whole kind of pattern could be confirmed then. But of course, I mean, this is where, I mean, some of you might say that maybe you're going to be already too late on that one, but well, again, that's part of the game a little bit, to be honest. So that's why let's be a little bit on the lookout. I'm not saying that this is exactly going to be the pattern here, but if it does confirm, if it does start falling somewhere below this 83.81 level, then it will start confirming it slowly. But of course, we would need to see that candle ending today, and then we'll just have, you know, this signal saying that yes, this has been the case. So it's a bit of a, that's why I do like to look at one of those patterns, but I don't really, let's say, base all my analysis on all that. So that's why be very careful. But coming back to gold. Now this one's, for me, this is all a mess here. Again, it's kind of, it drifted yesterday lower. It was sitting below this downside line. Now then it kind of climbed back up. Today it's trying to climb higher again. So to be honest, at this point, I'm kind of getting frustrated here with this commodity. And to be honest, I would rather take a very conservative approach and wait for a clear breakout. For me, maybe I'll start looking at the upside somewhere from around this 1810 level, or maybe even 1814 zone. This would confirm a forthcoming higher high and a break of this 1814, and then yes, more buyers could join in. But for the downside, a drop below the 1772 level would be needed in order to, for me, let's say, to get a little bit more excited with the downside. WTI oil just being there. Bitcoin. Bitcoin, now this is one of those examples of the so-called, this one is the bullish 3, yeah, sorry, the bullish, got this one a little bit around here. This is the bearish 3, that's the bullish 3, so yep, this is the so-called, sorry, this is the bearish 3, yes, and this is this could be the bullish 3. So there we go. Finally got my things correct. So not the bearish 3, this is the bullish 3, and here we have the bearish 3. There we go. So here, again, let's see if this is going to get confirmed or not. But one of those ways that you could, just to maybe protect yourself a little bit, is to maybe stick to an area somewhere around here. Let's say in this case for Bitcoin, the 62,444 level, approximately around here. A nice good pop above it, yep, could lead to some higher levels. And yes, then we could go for the upside on this one. Some might say maybe this could be, looks like more of like a flag, but to be honest, that doesn't really, it's not really the kind of the concept of the flag here. So that's why I'm not really considering that. But what I'm considering here is, like I said, is this bearish 3, because this is the bearish 3, and the bullish 3 is when the green candles are going up. Sorry, when the candles, or the 3 candles are going up. So this is the bearish 3, and let's see if this gets confirmed. And if we pop above this 62,444 level, yeah, then I'll start slowly aiming for the upside. AD NZD. So far, so good. The idea that I kept talking about seems to be, well, working out. We have been talking about, you're probably already tired of me talking about this pair, but well, to be honest, it's quite an interesting one. I mean, we started off from around here. I said that we could see a reversal here, a push higher, maybe a test of this area right here. We did that, and it got held, and we're seeing now another slide. So far, looks it so good. So in a way, this idea worked out. Now let's see if this idea can work out. This a drop below the 1.041820, approximately around this area. If we do drop below that, then well, this is where more sellers could join in. So keep that in mind. However, let's not rush into anything. Again, I just don't want to. I don't want this to be like some sort of a tease, for example, where it's going to test this area, this highlighted area, then rebound, go back up, and then basically end up being somewhat in a range. So that's why let's be a little bit more on the careful side here. Yes, I'm leaning a little bit more towards the downside, but yeah, let's be careful on this one for now. Like I said, the same analysis remains. If you remember, you probably do. So yeah, I'll just leave it I'll just leave it here. USD JPY. So let me just remove everything here, and what we see here is a bit of a mess. Now, what we also see here is a possible triangle. Let me just put this one on the chart. So this means that the pair is getting into a bit of a squeeze. Now, the prevailing trend before it entered this triangle, it was kind of to the upside. So okay, that could mean that maybe according to all the tier rules, then yes, this tends to break to the upside. Will it do that? We'll just have to wait and see, guys. For now, and as long as it stays inside this pattern, we'll just take a bit of a neutral stand, because if it starts dropping below this lower side of the triangle and then falls below the 21-day EMA, well, maybe this could result in a bit of a decline here. I'm not saying that this is where maybe we could start becoming like radically bearish or something, no, but you would still need to keep an eye on something like this here as well. So there are some bunch of things to consider later on, but let's not rush into anything. For now, let's keep an eye on this little triangle pattern, and I'm waiting and to see which way this one's going to break out to. If it's breaking, for now, again, let's say if we're talking about probabilities, then yes, the higher probabilities to the upside here, because the prevailing trend was to the upside. But can it do that actually? Well, we need that break first. Gbp Chf. Now this one's very, very interesting, and look at this, guys. I mean, we dropped, let me just get rid of this. Oh, there we go. We dropped below this key support territory, this area here. I talked about this one previously. So initially I was targeting this 1.2504 level, and then I said that if that gets broken, then well, the next target could be this 1.2473, marked by the lowest point of August, which we managed to violate perfectly, and we managed to stay below it. So now where we could go next, well, I mean, let me just grab this line. The first level that I'm going to aim here for is this 1.2372 zone, marked by the high of the 5th of February. Then the next target for me will be this 1.2279 level, marked by the low of the 12th of February of this year, of course, and then yeah, so on, so on. But again, looking at this, probably different Gartley pattern fans could say that maybe we're seeing here some sort of a bat, or or something like that. Again, could be the case. Anything could happen in the markets, basically. But so basically, some of you maybe who are huge fans of these patterns, then maybe could say that this is from where it could reverse and push higher again. It could. I'm not saying anything, but for me, for example, in that scenario, if it is something like this, then I would rather maybe stick to one of these levels here, let's say even the 1.25 zone. If we push back above the 1.25 territory, then yep, I'll aim for the upside again, only for a little bit here, because at the moment I can see that we're kind of stuck here. I would even say maybe we're ranging here a little bit. So yeah, that's why let's be a little bit more on the careful side. We're also still trading below this downside line. Are we actually in the falling channel here? Maybe let me just double check this. So okay, so if this is the case and we are in a falling channel, that could be quite interesting to see, to be honest, because then yes, we could see maybe a further decline. So this is where this idea of one of the Gartley, patterns here would not work out, and we could see a further decline. So then it could drift lower, and it could find support somewhere near the lower side of the channel here, and then rebound and push back up. So again, be very careful. For now, from my personal perspective, I'm leaning a little bit more towards the downside as long as the pair stays below this 1.2473 territory. If it pops back above the 1.25 zone, I'll aim for the upside. But for now, like I said, I'm leaning a little bit more towards the downside. EURUSD, so let's see how this is going to play out, because this is a mess. I don't really like it. What it's doing right now is just kind of pushed back above this 1.1582 level. So yep, I mean, we're kind of back closer to this 21-day EMA, around which we continue to oscillate. So that's why I'll take a bit of a careful approach on this one. If it pops back above the 21-day EMA, yes, I'll go for the upside, but I'll aim initially for this downside line taken from the high of the 1st of June, and then I'll take it from there. At the moment, like I said, it's for the downside. In order to aim for lower levels, I would rather wait for a drop below the 1.1525 territory right here, just to be a little bit more on the safe side, because such a break would confirm a forthcoming lower low. At the moment, it's like I said, for me, it's just not ideal, and I'm just going to continue observing the price action. So guys, that's it for this session. Thank you very much for your comments, guys, for your questions. I really enjoyed that. So yep, I hope it was useful. As always, guys, I mean, thank you very much for joining in and tuning in, and thank you very much for your likes as well. So I hope you'll have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and I'll see you tomorrow at 7 o'clock GMT time. Thank you very much, and bye-bye.